Hello, everybody. This is Jonathan G. Blanco with TF Podcast. I'm super excited to have Alex Mashinsky with me today. We had the chance to meet in LA a few months ago and have had people from Celsius speak at our conferences in the past. Alex is one of the top folks in blockchain crypto and did a lot of things with VOIP and now the MOIP, like I remember you talking about last time. So with that, Alex, please introduce yourself and thanks so much for taking the time.
Sure. Thanks for having us. Again, we are a community project. We did an ICO back in 2017. I've been in the industry since about 2013. And I'm really excited about decentralization, about the power of the community, and we're trying to really pull all that together to create a new financial system that replaces this chaos that we're going through right now with something that actually acts in our best interest.
Yeah, let's dive right into that, right? The chaos that's going on right now. It's been a wild couple of weeks. There's been people talking about there potentially being indicators over, this last, call it several months, but no doubt the coronavirus and COVID-19 have played a big factor. If nothing was happening, that definitely, pushed things over the edge. So, we've seen the markets go down quite a bit. And people are legitimately concerned. Love just your take overall on the overall market, not even just crypto, but just like the overall market and what kind we're seeing there. And we'll just kind of start at that point.
Well, I don't want to sound like I'm saying kind of saying that the coronavirus is the pin that is popping the bubble. The bubble is not about the bubble was the fact that we had so much leverage in the system, so much debt, and since 2008, all we've done is kick the can down the road, taking even more debt, fake GDP that we created, the future, spending it right now. And all of that is going to have to unwind. That's what I'm saying. The markets will have to probably go 50% down, 50% or more, because we went up 50% or more for no reason. I mean, there was no real GDP or real productivity there. And what the Fed is doing is again, should be illegal, right? I mean, they just lowered the requirements for banks to zero. That means that until now, banks could do fractional reserves and keep 10 cents on a dollar. They lent 10 times as much as they kept. Now they have to keep zero. So they can go to the Fed, borrow money for free, and then lend it out and keep all the profits to themselves. Now they're going to give zero basically to the depositor. So again, we're penalizing the saver, we're penalizing the depositor, and we're giving even more money to the speculators and the people who are leveraging our economy 10 to 1, 20 to 1, 50 to 1. So it's the opposite of what we should be doing. No moral hazard, no consequences. And again, none of this stuff that's happening today is helping me or you. It's only helping the people who can access billions or trillions of dollars and put it on their balance sheet and make money for money.
And we've seen this before, right? It's not like this is the first time we've seen those actions. Why do you think that happens?
Yes.
Like, why do you think we don't learn from our mistakes on that? Is it, is it just stress thinking? Is it, I'd like to think that there was an understanding if certain levers get pulled, the markets would react in a certain way, right? Like, these people are supposedly smarter than us in that regard, right? But it doesn't seem to be the case.
Look, I spent an hour-long AMA on the Celsius Network YouTube channel, AMA number 4, explaining step by step why all this is happening. And I have a great chart there that shows you the history of all the empires that ruled the world in the last 2,000 years. And you can see that the Roman Empire did the same thing, and the Ottoman Empire did the same thing. And so there's 6 or 7 empires there. They all debased their money. They all eventually they basically lost their power because they diluted their currency. So just to put things in perspective, right? The Fed in 100 years, since basically 1913 when they were created until 2008, only created just over $800 billion in US dollars. Then in
Okay.
10 years, since 2008 until last week, they created $3.5 trillion. So they printed 3 times as much money in 10 years than they did in 100 years. And now we're going to double that just in 1 year. So we're going to go to $6 or $7 trillion on the Fed's balance sheet. Again, this is just an entry in the spreadsheet. None of
Yeah.
this economic activity actually exists. All that does, it dilutes or debases the currency. So with that, you should see gold prices going up. You should see Bitcoin prices going up. You should see commodities like oil prices going up. But the opposite is happening because people are confused and people are running to cash because they're concerned instead of buying assets that are detached or non-correlated to the US dollar.
Yeah. And why do you think that is? I mean, of course, the obvious of having cash is, this sense of security that you can use that cash, when things are not liquid for other people and so forth. But, obviously there's a human nature element to that as well. And frankly, the ability to leverage that cash, right? I was talking to my dad and he's like, oh, I should have cashed out my 401k. And I was like, perhaps, but don't do it now, obviously. Right. And, the thing with my dad is he wouldn't necessarily know what to do with it if he did, right? Like, let's say he does take out his cash, at the top of the market, like where does he put it? And so, and that's because he's the layman person and so forth. He's a smart guy, but he's not a financial wizard, right? So, what are your thoughts there? Is like, why do you think people are naturally going to cash? And then how we've seen this cycle before. You've obviously studied it. What are kind of the repercussions and effects there?
So look, no one knows what is the perfect timing and when things are going to turn, but when you look at history, you will see again and again that the same cycles take place. The trigger is different, right? Last time it was the banks. This time it's an external event like the coronavirus, and then each cycle it's a different trigger. But what happens is that eventually, in the short term, we all run into cash, but then we basically redeploy all these assets back into the stock market or other commodities, right? And in
Yeah.
each cycle, a different commodity becomes the one that is scarce, right? So I don't
Yeah.
think in the next cycle oil is going to be the one that is scarce. It's probably going to be something else. But what's happening today is that trillions of dollars are changing hands. And they're going away from the people who were speculating on leverage to the people who were basically waiting for a very long time, waiting to be right, saying that none of this is sustainable, right? And
Yeah.
right now, this is the fastest value destruction in history.
Yeah. Yeah.
These indexes have never gone down so fast in such a fierce way. Just destroying careers, destroying families, destroying people's lives. And again, the people who are going to walk out of this with huge bonuses are the Wall Street guys. They
Yeah.
created it. They pumped it up. They put the leverage into the system. They sold all of these derivative products and everything else, and they get to cash out on the way out as well. So we're not going to fix this by setting up new rules after this collapse. What we need
Right.
to create, and that's what I committed the rest of my career to, is an alternate system that acts in our best interest. A system without leverage, a system without fractional reserve, a system without a central bank. And the beauty of it is that we already have the Bitcoin, the Ethereum blockchains. These are the foundations of these new systems. They've proven themselves. They're running without any issues, right? Up, down, doesn't matter. But
Yeah.
the point is that they're working perfectly well through the system. Celsius demonstrated risk management. We had no default. We had no liquidations. And we have zero leverage in our system. We always have more deposits than loans.
Yeah.
So we know that it works. We just need to convince 7 billion people to stop giving their money to banks and financial institutions who sooner or later gonna basically ruin their life savings.
Yeah, let's dig into that a little bit, because some of the sentiment out there before this happened was, hey, these DeFi companies, the second the market goes down, they're going to be over leveraged, or they're going to go bankrupt, or these types of companies are going to shut down as a result of being over leveraged, et cetera. It sounds like that's not the case, for Celsius and for you. I'd love if you could kind of explain that first. Why would someone make that assumption? Like, where is that? What's that assumption based out of? And by all means, disprove that based off of how you've been operating.
Sure. So first, not all DeFi is created equal, right? So DeFi stands for decentralized finance, which is different than fintech. Fintech are the hundreds and hundreds of companies for the last 30 years who try to disrupt or amend the banking system and have had zero success. So I think the fintech chapter is kind of behind us. None of those guys are gonna displace JP Morgan or act in your best interest, right?
Yeah,
DeFi,
if anything, they're just gonna kind of can't beat them, join them type thing, right? So it's like, hey, like
exactly
we'll
what they
go
did.
ahead and join you. You think of, yeah, totally.
Exactly. Let's share revenues, but JP Morgan, you can continue paying zero interest income to your customers. So what Celsius has done is really very different than what everybody else in DeFi did, right? If you think about Maker or Compound or all those guys, they allow you to basically stack and borrow against your assets and create leverage in the system. And they don't pay well while they're creating this leverage. So there's a huge gap between what it costs you to borrow versus what it costs you to earn. So to borrow, you would pay 12, 13, 14%. But to earn, instead of making 80% of that, like with Celsius, you'll be making 3 or 4%. And the stability fee is 9 or 10%. So most of the money goes into a stability fee, not to the owner of the asset.
Yeah.
And when the system has an issue, when there's an earthquake, there's huge liquidations, and basically not just companies like Maker are helping the liquidation. They're forcing ETH to be liquidated even faster, right? Because they're collapsing that tower that they created, but also there are hacks and other exploits that allow people to come in and hack several of these DeFi systems. So they've proven that they're not really working well. Celsius works this way. It's a completely different system. Celsius basically has zero leverage at any time. We don't use leverage at all, right? We collect coins and assets from 80,000 retail users, and we only lend them to institutions. And we always have collateral from the institution. There's no leverage in the system.
Got it.
Right?
Okay, got it. So, sorry, just to clarify on that. So you're only lending to the institutions, is what you just said?
That's right.
Yeah,
so
okay.
We expand the network this way, meaning we don't create any leverage in the system. You don't want to create leverage and copy what Wall Street does.
Yeah.
The last thing, so what did we do? Let's look at the last 10 or 11 years. We had NASDAQ, so we created Coinbase. We had the hedge funds, so we created hedge funds in the crypto space. We had leverage in the system, we created leverage in the system, right? So companies like BitMEX and others give you 100-to-1 leverage. It's like a nuclear weapon, right? So what happens when your base asset goes down 50%? The reason it goes 50 or 60% is because companies like BitMEX are liquidating all their customers. During this liquidation in the last few days, the price on BitMEX was $800, sometimes even $900 lower than on exchanges. So what does it tell you? Who is driving that liquidation? BitMEX is the tail that is wagging the dog, right? It was driving all the markets down. It was forcing everybody to sell in a more and more fierce way. And they liquidated close to $1 billion worth of loans, meaning they wiped out all their loans. They lost all their customers, right? And so who is that good for?
Did customers
community?
Not at all. Not at all. Do customers then, aside from losing like the value of what they have, did they lose like more than they should have, I guess, in that scenario?
Yes. So a lot of people that were on leverage on BitMEX got liquidated because the price on BitMEX did not match the price for the rest of the community.
Yeah.
So when that happens, you're being liquidated for no reason. If you had the same asset somewhere else, you would not be liquidated.
Got it.
But because the selling pressure on BitMEX was so fierce, right? And that exchange is not really connected to any other exchange. Like the price of Apple stock is when it trades on 12 different exchanges around the world, it's exactly the same price. It's within 1/10 of 1%, right? The price difference. Here, the price difference was 20-25%. So that tells you that it's not just that these markets are not efficient; they're being manipulated, right? And part of it is that if we're trying to build a community that's supposed to support billions of people, is supposed to act in their best interest, if we're going to follow Satoshi's dream of creating a replacement for the financial system, then we need to build something that does not replicate Wall Street. And all we're doing in all of these companies is replicating Wall Street. So the whole idea behind Celsius Network was to create a network that always, it's not a neutral party. We're not a neutral party that has hedge funds on one side or exchanges and has depositors on the other side. We only represent the depositors. We always act on behalf of the depositors. We just happen to be the collection agent that collects the interest and the fees from the borrowers, which are hedge funds and exchanges, and delivers 80% of that to the retail user, to the depositor.
Got it.
And so when, if you look at the Fed have been lowering rates, paying less to the 350 million people that live in this country, right? And most people, if you ask them, they say, oh, the Fed is lowering rate. That's good for me. That's an excellent thing.
Right.
You know? Well, it's not good for you. It's not good for your kids. It's not good for your grandkids, right? So people have to understand that not always what the Fed does is automatically positive. It's negative for you, the consumer. It's positive for banks. It's positive for Apple. It's positive for huge companies that benefit from the fact that rates are low. Unless you're buying a house right now, or unless you're refinancing your mortgage, which most people can do because half of this country is going to lose their jobs in the next few days, this is hurting you. Whatever little money you were earning is going to be taken away from you as well.
Yeah.
At the same time, we've raised our rates. We've raised what we pay on Bitcoin. We've raised what we pay on most of the coins we have, because when we earn more, we pay more.
Yeah, I'd love to dive deep on that, right? Because I've heard you say that before. You know, that I think you said you pay, there's like the 80% spread. Is that correct?
Yes, we set the bar pretty high.
Yeah.
That's why anyone who wants to compete with us, everybody says, oh, I'm going to compete with Celsius. Great. Are you going to pay more than 80% to your community?
Yeah.
You know, and then they realize, wait a second, you're paying 80% of what you make? Yes.
Yeah.
You know, so the challenge, we want everybody to pay 80% or more. That will be a beautiful system. I would love to have competition. I would love to have all of our competitors subsidize their rates. BlockFi subsidizes their rate. Crypto.com subsidizes the rate. They don't really earn that money. So they take their investors' money or they take their ICO money and they subsidize the rate, and they try to stay competitive with us. We announced today, that we're profitable. We've been profitable in 2019. We're profitable
Congrats.
this year. March is our best month on record. Why? Because we get, with volatility, we get to charge more to the exchanges and the hedge funds.
Yeah.
If you take, just to clarify, if you take
Sure.
one coin and you give it to Coinbase, or you give it to some other exchange, they don't give you anything in return. Just like when you put your Facebook stock with Fidelity, they don't pay you the money they make rehypothecating those assets. So whatever we make from that asset, 80% of that on average goes to the community, and we invite everybody else to do the same.
Yeah. Yeah. And tell me, what does traditional banking look like on that? So if you're doing 80%, 0%.
Charles Schwab pays you zero on what they earn on your Tesla stock. Right now, if you want to short Tesla stock, the cost to borrow that stock is 30% per year. Meaning, if you have $10,000 worth of Tesla stock that you gave Charles Schwab, they earn $3,000 a year on that. How much they're giving you on that? All they're giving you is a free trade. They're basically saying, we're not going to charge you $4.95 when you buy it. But then they rehypothecate it again and again and again. So these are the secrets of Wall Street that no one knows about, right? I mean, most consumers have no clue what happens to their Apple stock or Facebook stock or Tesla stock. Mm-hmm. So what Celsius has done is basically said, look, we're going to take the best secrets of Wall Street. We're going to put them all together into one bucket. And whatever assets you give us, we're going to use those to create interest income. And we're just going to pay you a weekly interest income that represents what your assets yielded. And our wallet, you know, the Celsius wallet, which you can download from Google or the App Store, has 25 assets in it. All those assets yield. You just have to decide, do you want to yield on dollars? You're going to earn 7 or 8% by just putting dollars. You don't have to do anything with it. You don't have to move it. You don't have to trade. You don't have to do anything.
US dollar, fiat 7% on
Yep.
fiat. Okay. Wow.
Yes.
Yeah.
We have Canadian dollar. We have Australian dollar. We have British pound, right? So you can put those assets to work, earn yield. Now, and I always say to people, like, instead of people telling me, oh, we got to get people to buy Bitcoin, I'm like, no, let's first get them to buy a stable coin.
Yeah.
Let's get them to buy USDC or TUSD or GUSD. And when they see that those earnings, they realize, wow, my bank is really stealing from me. How can Celsius for 2 years, over 100 weeks in a row, we paid interest to all of our depositors? How can they do that with no leverage, no frictional reserves, no borrowing from the Fed? We're earning 7 or 8%. So imagine how much the bank is earning on your money.
Right.
Actually, it's very, very easy to find out. They make 24%. That's what they charge you on your credit card.
Right.
Right.
Yeah.
So when you give them money, they pay you nothing. But when you borrow from them on a credit card, the next day they charge you 24%. So how much do they make? So why are they so greedy? Why are they taking all these profits and giving it to their shareholders and not giving any of that to the depositors? That is the real question. That's a question no fintech company is asking, no DeFi company is asking, right? Creating a solution that it just allows us to put leverage on ETH is not helping us, get rid of the banks or move the money, build bridges where we take money from the centralized world and move it to the decentralized world.
Right.
So my point, I love DeFi. I just think that the efforts of the community are pointed in the wrong direction.
Yeah. Yeah. So in that scenario, like I put in, my USD and then I buy a stable coin with that. And then through that, get the 7-8% or so forth.
Yes.
Yep.
And if you have Bitcoin and you really love Bitcoin, you can earn 3 or 4% on Bitcoin. Right?
Yeah.
Why? Because we landed at 5 or 6 on average. Look, during the last few days, we charge as high as 100, 120, 150% for Bitcoin. It was only for 1 day, but on average, we charge anywhere between 4 and 6%, sometimes 8% to borrow Bitcoin, and that is much better than not earning anything. That is much better than either keeping it in cold storage or keeping it on an exchange and not earning anything.
And then the people or the entities that are that you're lending to, are they then using it for trading and things like that in the market? Are they putting that into the market basically? Yeah,
so that's a great question because most people don't understand, well, why would somebody borrow these assets? So our community is a hodler community, right? Everybody in the Celsius community believes that if they keep these coins for another 10 years, they're going to be worth several times what they're worth now.
Yeah.
So they already took the risk of owning these assets in Bitcoin. They're denominated in Bitcoin. All of our borrowers are denominated in dollars. Who are they? They're all hedge funds and exchanges that are trying to take advantage of price fluctuation. So they don't want to buy Bitcoin and then have it drop 50% on them. What they want to do is give Celsius dollars, borrow the coins, do market making or arbitrage or shorting sometimes, and then return the coins. This way, they offloaded the risk to us, which is great because our community is basically saying, sure, pay me. You want to offload the risk? Great, pay me for that. Pay me 8%. Right?
Got it. So they're essentially like working the coin, and then when they're done working the coin, giving it right back to you, and you charge a fee for that, and then that gets split up.
We charge them interest.
Yep.
And we give 80% of that interest to the depositor. So, which is again the same thing that Charles Schwab does when you give them your Facebook stock. They lend it to market maker. They lend it to broker dealers. They collect the fee. They just don't share anything with you. They keep 100%. How do you think these companies have these beautiful buildings and fancy offices and private jets? It's not because they're charging you $4.95 per trade. So most people just don't understand where the money comes from.
Yeah.
So so all we've done is take the best secrets of Wall Street, and people call me and say, Alex, you're crazy. Why are you giving so much? Why can't you pay much lower fees? I mean, much lower rates to your depositors. Why are you paying so much? It's too much. You know, you're ruining our business. So, and the reason for it is, if our mission from day one was that we want to bring 100 million new people into crypto, you're not going to bring them by paying what the Revolut does. They take 1% the bank gives you and give you a quarter of 1% on top of that, which they subsidize from their investors. That is a fintech solution that is not scalable, and it loses money on every transaction, and it doesn't scale because you haven't solved anything.
Right.
On 13 different blockchains, we use the same smart contracts and multi-sig and MPC that every other DeFi company uses, but we also have one leg in the centralized world because we want to be the bridge that brings all of those assets into DeFi. You see, if you're a maker, all of your customers have to be pros. They have to know exactly what ETH is, what a smart contract is, what liquidations are, and so on. And so you're not. So they start adding some centralization, right? They added USDC. They added some other thing. Finally, they said, fine, yeah, let's put one leg in the centralized world because we have to, right? So I think these are all good moves. They just coming after we basically liquidated all these customers, not us Celsius, but I'm saying other players in the community. Liquid customers or not crypto land and go back to fiat land because we lost them a lot of money.
Yeah. And when you think about from the banking sector and you know, like you said, putting a foot in the centralized world and so forth, you know, there's all these banks. I think it's something like 10% of banks are either working on or thinking through, you know, what a stable currency looks like for them and so forth. I'd love to get your kind of thoughts overall on that. To me, that seems like it makes sense in the interest of the bank, right? What are your thoughts as far as in the interest of the customer with that regard? Can they benefit from that as well?
It's a great question because really you have three horses kind of racing in that area, right? You have the traditional, what I call intranets or private blockchains, Libra, JP Morgan, all of these companies that say, hey, you don't need the public blockchain. You don't need consensus. You don't need all this other stuff. We'll run it for you and we'll make all the money. You're just going to get the service for free. Didn't the Facebook service work well for you with fake news and fake friends?
Yeah.
We'll give you fake money also. You know, don't worry about it. And then you have a separate horse, which is the government. So now you have the US government, the Chinese government, a bunch of other governments are saying, oh, don't worry. We'll just take this dollar that we keep printing and we're going to put it on the blockchain and we're going to make only the government will be able to print, right? Well, we know how that ends up. Again, every empire in the history has collapsed because they printed more and more and more invisible money that didn't exist.
Yeah.
And we have the third horse, which is the original horse, right? Which is Bitcoin, Ethereum, and so on, which is the open public blockchain, just like the open public internet. So each one of us, each one of your viewers have to decide, are you going to vote with your credit card or with your bank account and keep giving them the money? Because remember, banks don't have any money. When they issue a loan, they take your money and they give it to somebody else. They just keep all the profit. If you stop depositing all of your money over there and you start giving it to the decentralized solutions like Celsius and others, you're going to take all the power away from the banks. And I know that because I did that with the phone companies, right? The phone companies, everybody thought AT&T had all the power in the 80s and 90s. People looked at me and said, are you crazy? You're going to go and take one of the largest companies in the world, one of the most profitable companies in the world? And I was like, yeah, I'm going to give people voice for free. How can AT&T compete against voice, free voice, which is what we're using right now, right? Yeah. And we had one leg in the TDM network and we had one leg in the TCP/IP network. We created a bridge between those two. In the beginning, you had to use your phone's system to actually use VoIP. Now we're using VoIP because everybody has an app on their phone and the phone is using TCP/IP. Back then, the phones used TDM. Yeah. So it's, I've seen this movie. That's why I keep screaming of the rooftops, hey, I know how this movie ends. Let's just go straight to the finish line
Yeah.
instead of ending up in all of these dark alleys and having to reverse and go back and do something else. The
Yeah.
problem is the community, we don't have that much time. We're already 11 years into it with Bitcoin. And frankly, how many users do we have? When VoIP was 11 years old, we already had 1 billion users. You understand? So we're barely at 40 million users and everybody thinks everything is wonderful.
Yeah.
So in my world, we failed. We failed to bring all of these, we failed to give these users a real use case to come from the fiat land to the crypto land. And for me, a real use case is simple interest income. And I keep saying that to people. It's not healthcare on the blockchain. It's not supply chain on the blockchain. It's not all these other things. It's just giving you something that neither the banks or the central banks will ever give it back to you, right? We're going to have negative rates all over the world for the next 30 to 50 years.
Yeah, no, it's wild. Do you think there's a place for centralization when it comes to stable currency, or when it comes to, like in these banking scenarios or Libra? Is there a value there? Is there a case there? Or
look,
yeah,
the temptation is just too great. The temptation is too great to print money or create money out of thin air.
Yeah.
And we've seen that again, and even in the DeFi world, right? I mean, we've seen projects that had the coins dedicated to developers or to the community being repurposed for other purposes because why? Because somebody could put their hands on it, right? So I think, again, the reason Bitcoin is king is because no one, it doesn't matter if it's a coronavirus or it's a government emergency or whatever, no one, God can't come down and say, okay, I'm printing another 20 million Bitcoins because we have an emergency, right? So I think we live in a world in which trillions of dollars, the Fed is going to print $3 to $5 trillion in the next year or two. They're just going to flood the market with basically diluting everybody by 50, 60, 70%. And people don't understand what that means.
Yeah.
You're going to go to work, you're going to exchange your time for this dollar, something called a dollar, right? And it's going to be worth a half or a third of what your time was worth just yesterday.
That's wild to think about.
Yes, but that's what's happening.
Right.
The ice cream that you're buying or the sandwich you're buying is going to go up in price. Your time is not going to go up in price. Mm-hmm. If you look at productivity and you look at pay, and I've posted this again, go to my Twitter account, you can see that. Since the 70s, the average American average pay has not increased at all, right? All the gains went to either the tech industry or to the finance industry. If you were in those two industries, you did great. But if you're in any other industry, you basically had negative yield. You earn less today than you earned in 1971. Totally.
That is crazy.
And that's why we have this. That's why we have this commotion and I'm talking about on the politics side, right? That people are just saying, I don't know what's wrong. I just know it's not working for me, and enough is enough. I'm gonna vote for anybody who's not affiliated because I need somebody else in the White House.
Yeah, it's interesting. There's definitely so much turmoil there. And what I find super interesting and just in this conversation we're having is the awareness that more of the public has, right? Is, because of things like Twitter and because of, news at every angle and everywhere, obviously there's opportunities for getting misinformation more than ever, but there's definitely more information than ever. Because in 2008, last, economic downturn, I don't remember having the conversations I'm having now with people, right? Like just people weren't as aware. And I don't know if it's just because that's recent memory to folks or what, but yeah, I'd love what your thoughts on that. Everything's amplified.
But now we polarize the opinions.
Yeah.
So now with fake news and fake information, no one knows what the real truth is. It's not all the way on the left and it's not all the way on the right, right?
Oh, totally.
So what is the truth? It's not about picking sides, right? I mean, the only guys who are winning from this are all of these foreigners who want to disrupt the United States, who can compete with us from an economic standpoint. So all they do is poke at us and create internal chaos for no reason, and we fall for it. We're like the clowns of performing for them, doing crazy things like so
On social
all I'm
media and
saying is
whatever. Yeah.
exactly. So look, I can't solve all of that. All I'm focused on is the financial system. I think the financial system is at the core of what's killing and ruining America.
Yeah.
And as an immigrant, somebody who came here, who's been extremely successful. I mean, this country gave me amazing opportunities. You know, I did 7 startups before Celsius and had billions in exits. Giving back is creating something for the people, something that hopefully will outlast me and will survive any kind of economic downturn, including like it's being tested right now. And it's beautiful. I love the fact that our model is being tested. I love the fact that we have 0 liquidations and 0 bad debt, and we're more profitable than almost every other company on the blockchain. So and we doing it while we're giving back so much. So and it shows you that you can do good and do well at the same time. And for me, that is the main purpose of the blockchain. That is the main purpose of cryptocurrencies. So I'm
Yeah.
calling on every other project to rethink why they're here. If
Yeah.
you're just recreating Wall Street, then what did you do?
Yeah, no, I mean, it's a great outlook, and definitely you don't see a lot of that. There's a lot of companies even that say that they're decentralized and in fact aren't, right? Or like they will be at some point, or it's very clear
Or
that
they
it's.
press a button and they stop their blockchain, right? I mean,
Yeah,
come
exactly,
on.
exactly. Um, so, going just to kind of finish up here, what are your thoughts overall on where do things end up right now? So, we don't have to be predicting anything per se, but we've lost about 30% of the value in the stock market, and Bitcoin went down quite a bit. What are your thoughts on the whole Bitcoin correlated, non-correlated? Does it matter right now? It seems like Bitcoin has been able to, though it went down, it's pretty much flatlined, which is, in my opinion, a good thing, considering what other things have done since, right? So what are your thoughts overall on that?
I think every asset that is leveraged is going to go through this flash crash. So that's why you're seeing oil, which was extremely leveraged, going through a flash crash, right? You're seeing Bitcoin, which was extremely leveraged through the futures and option markets, going through a flash crash, right? So we haven't seen that yet in equities. Equities still have to go through that flushing. And that's probably, I would say, we have to get to that 50%. And we're going to have a beautiful recovery. I agree with that. But again, a lot of Americans are going to lose their jobs. A lot of Americans are going to lose their savings because they're just going to get too nervous and sell their holdings all at the wrong time, or they're on leverage and they're being liquidated as we speak, right? So none of these things are good for the economy or for the average person living in this country. So Bitcoin should not be a correlated asset. And the reason it is correlated is because it's exactly the same people that trade in oil and stocks and that are also speculating in this asset class. And
Got it.
we need more hodlers, right? So we're flushing through
Yeah.
all those people and we're hitting bedrock, right? Well, what does it mean bedrock? Bedrock are the people who are here for the right reasons. They're not selling. The Celsius community, I don't see any withdrawals. All I'm seeing is more deposits. People are buying more coins and depositing with Celsius because they want to earn even more interest. So it tells me that none of the hodlers are moving, right? The only people who are moving are the guys above the waterline. If you look at the iceberg, most of the communities is the bottom of the iceberg. It's what you're seeing that is going up and down. You think, oh my God, look at all this movement. Well, all this movement are speculators who shouldn't be here in the first place.
Yeah.
So I
Yeah, so
think
it's basically thinking about it as a long-term investment, just like you might, would have with any other stock when you first buy it, right? Perhaps you have things that you want to get a certain gain, and maybe you'll sell it then. But for the average person, when they're making stock investments or any type of investments, they're more thinking in that long-term retirement scenario, and why not
yes.
hodl, right? Yeah.
Yes, and I think, look, we've tested and breached the 200-week average for Bitcoin, which only happened 3 or 4 times before. So I think we flushed through it already, meaning we should be stable or higher. And I still think that we will have new all-time highs by the end of this year, because the halving is an event that is, again, it's a positive earthquake to the community, because only instead of 25 bitcoins every 10 or 12 minutes, now you're going to have 12 and a half bitcoins, right? So it's a huge event. It's not a little event, right? And we already flushed through all the bad news. We flushed through a lot of the leverage that was in the system. So we have a very good foundation to scale from here. So I think it's going to move fast. But look, there's a lot of bad news. The next few weeks, if the death rate in the United States and around the world is going to be greater than the 2% that everybody's predicting, look, nothing I'm talking about is relevant, right?
Yeah.
We're all going to be fearing for our lives. So I think everybody has to really think hard. What's your allocation? How much do you have in these very volatile assets? Bitcoin is not a safe asset. It's a very volatile asset. It's an exceptional long-term store of value, but short-term, it's a very volatile asset. So you can't put you can't put all of your money there, right? So you have to have some in cash, some in stocks, where you basically averaging down or waiting for it to start going up, and you're averaging up, and then you have at least a chunk in gold and a chunk in Bitcoin.
Yeah.
And again, no financial advice. This is just me sharing my opinions and what I'm doing with my own money.
All good. Yeah, we don't give financial advice, health advice, any advice. We just like to talk like we know what we're talking about. No, I'm just kidding. We just like to talk about things. So no, that's good. Well, hey, Alex, what kind of questions or what kind of things do you want people to think about? You've touched about this a little bit throughout our conversation, but if you could leave those listening with something, what are the things that they should be thinking about? What are conversations they should be having with their, friends, significant others? What are the things they should be talking about? Like specifically right now with what's going on in the economy and COVID, and then also like, in a long-term context, right? Like how they think about things.
Yeah. So look, the positive side of COVID-19 is that it will bring us together, right? I mean, you can see that people are stopping and saying, oh my God, people's lives are at stake. Okay, how can I help my family, my friends, and my loved ones? These are the things that really matter in life. Again, it's not the guy with the most toys, the guy who dies with the most toys who wins, right?
Yeah.
We're gonna be counted for our deeds, not for our toys. So I think it's a great awakening from all of this partisan fighting and chasing as many dollars as possible and so on. So I hope that this will last. We'll see how long it lasts. But you can see that people's attitude, people's priorities have been reset. And this is a great opportunity for the nation to come together and really use this to rebuild America, because greed is not the answer, right? And again, I'm part of the 1%. I'm not pretending to be the poor guy from Harlem, right? But I came to this country with nothing, and I remember not being able to pay my rent and not being able to pay my bills. And I know how the average American, at least half of Americans, are living day to day, paycheck to paycheck. And they're not going to get a paycheck in the next few weeks, right?
Yeah.
So we have to do something for all these people. And hopefully, again, the government will come through. But a lot of it also, this is the opportunity for the crypto community, for the DeFi community, to build things that solve these problems, instead of just try to extract more tolls from these people.
Right.
Because all these companies that you see, they're all toll collectors.
Yeah.
They're just like Wall Street. They're just trying to be they pretend to be the nice toll collectors.
Yeah. Yeah. Yep. I think I remember you telling me you're from Ukraine, correct? Originally?
I was born in the Ukraine, yes.
Okay.
When it was still part of the USSR, the communist USSR.
Yeah, I'm just curious, like what, have you followed or paid attention much to like how the sentiment or opinions are in Ukraine, or, back home with family, if you have family there and so forth? I'd love to kind of get that out insight real quick.
Well, look, we have it much better than the rest of the world. Most Americans take it for granted. They think that everybody in the world just wakes up with a latte and have somebody walk their dog while they're getting $150,000 a year for doing nothing. So that is not the experience that most people in the world go through. They barely make a living, right? They don't have health care.
Yeah.
When a virus like this shows up, no one cares if they live or die. So it's not a fair comparison. And I think, again, we are the richest country that ever existed on the face of this planet, and we have
Yeah.
all these problems, and we are the richest country that ever existed. So I just think that, again, I grew up in communism. I was born in communism. I grew up in socialism in Israel. I've seen the other systems.
Yeah.
We should be thanking ourselves every day for this amazing country we have, but we're going in the wrong direction. And again, I hope that this will be an opportunity for more people to reset, reprioritize, and take the things that really matter, and make that their life choice. Make those things the priority for their lives, because the pursuit of happiness, as the Constitution tells us, is not the pursuit of dying with the most money. Those are
Yeah.
not the same things.
Right. Right. Yeah. Happiness isn't a destination. It's a way of life, right? Like
It's all here.
yeah.
Yes.
Yeah. I totally agree. Well, it's been a great conversation, Alex. I super appreciate it. What's the best way for people to follow you, get in touch with you, follow Celsius and so forth? How can they?
Sure. So best thing is to download the app, try it out. We also have services like SellPay and other services that allow you to send money for free to other people, to invite them to join the community. Your recipients don't need to have an account or a Bitcoin account or an Ethereum account. You can send them anything. It works like Venmo, basically. So try it out and be generous and help other people. But follow us on Telegram at Celsius Network, or Twitter at Celsius Network. www.celsius.network is our website. A lot of information there, at least 100 different videos of me talking about all the different aspects of crypto and other people. And my email is alex@mashinsky.com, my last name, and I answer my own emails. So if you send me something, if you think you want to join the revolution, you want to contribute by joining Celsius, tell me why you're special and what do you know that other people don't know that is the reason we should add you to our team.
Excellent. I love it. Love it. Alex, thanks so much. I appreciate this. And for everybody listening and watching, thank you so much. And make sure that you are subscribed to our different channels so you can see videos like this more often. All right, Alex, you have a great day, and we'll
thank
be.
You. Yeah, I want before you cut off, I want to thank you for the work you do for the community, because content and education is what matters, right? We want to bring as many young people in and bring them in for the right reasons. So I really, I cheer all your efforts and appreciate your tenacity. Good days, bad days, you're always there. So
awesome. I really appreciate you saying that. Thank you so much. All right. You enjoy the rest of your day, and I'm sure we'll be talking soon.
Stay away from the corona. Yeah.
Yes. Yes, definitely.